Good afternoon, everyone. I'm Tim Richards, Technical Services Manager of the Managing General Agents Association, and on behalf of the MGAA, I'd like to welcome you to our briefing this afternoon. This is being delivered by Vitesse on the subject of Build the Optimal Claims Customer Experience Strategy. Before I introduce our presenters, I'd just like to run through a few housekeeping points. First of all, please ensure your microphone and camera are turned off. If you'd like to ask a question, feel free to use the chat button at the bottom of your screen. Time allowing, these will be asked and answered at the end of the event. There is a poll question during the presentation. Just to let you know, the answers are anonymous. If we run out of time, questions will be answered after the event, and this presentation is accredited for CPD hours, irrelevant to your ongoing professional development program. The briefing is being recorded, and a link to the recording will be issued post-event, together with the slides and our feedback survey. Please take the time to complete our survey, which will take no longer than 2 minutes. This allows us to deliver the best possible future events to our membership. So to recap, today's briefing is on the subject of Build the Optimal Claims Customer Experience Strategy from Vitesse. So let me introduce you to our presenters, Mark Rogers and Nyasha Kwana. Mark is Head of Business Development at Vitesse PSP. He joined Vitesse in May 2022, having previously worked in banking at both JP Morgan and Barclays. Mark was with JP Morgan Payments, supporting CFOs and treasurers within JP Morgan's insurance client base. Nyasha joined Floodflash as Head of Product in 2019, before becoming Commercial Director in 2023. Nyasha oversees Floodflash UK sales and broker relations, as well as the global claims team, setting a company record in 2022 with 1 claim paid in full in just 3 hours, 50 minutes. So without further ado, enjoy the briefing, everyone, and Mark, over to you.
Thank you very much, Tim. Good afternoon, everyone. Many thanks for joining, and thank you to the MGAA for inviting us to host this event today. The kind of format of today will be, we're aiming for a fireside chat, so Nyasha and I are going to kind of bounce around some ideas, talk about things that we've seen out in the market, and hopefully facilitate a kind of engaging discussion. Interaction is certainly encouraged, so any questions you have, please submit through the chat function, as Tim said, and we will try to address those as well. And we'll do the poll, and we've had 6 pre-submitted questions as well, so we've got plenty to talk about. So hopefully it'll be a kind of a fun hour. If talking about claims for now can be fun, but I think we'll do our best. Yeah, we'll start. So in terms of who we are, I think Tim's done a great job of introducing us, and great to be here. In terms of the learning objectives, this is the kind of things we want to cover. Describe how technology can help streamline the claims payout process, how we can ensure customer satisfaction by having funds in the right place, and then talk about partnerships, and probably that's where we'll spend the most of the time. Before we do that, I just wanted to kind of show a few stats that Nyasha and I pulled together that we thought were particularly interesting. So, and these talk about, obviously there's a lean towards the parametric insurance space, given we're very lucky to be joined by Floodflash today. But I think all these kind of stats were are great indications of the way the market's changing, the way that technology is having a rapid impact across our lives in everything we do. But certainly insurance may have been a bit slow to the party, some would say, but is definitely kind of full force and effect now. And certainly when I get out there and kind of meet all parties in the market, from MGAs to carriers to brokers to TPAs and DCAs, and then the fintechs work with them, everyone's kind of looking at what the next innovation will be. But also we all have limited resources, limited time, and limited budget. So it's okay, what can we do? What can we deliver that will have an effect and will actually ultimately, and what we want to kind of talk about today, will improve the experience of the insured and the customer. Anything you'd add on that, Nyasha, before we kind of talk through some of these key kind of market data points?
No, I think we're good to go.
Good. Okay, so one thing, well, let's start with global parametrics. So I think you can't, I can't go on LinkedIn, this might be because of who I follow, but generally there's always huge excitement around the parametric insurance space. It's now valued at 11.7 billion globally, well that was in 2021, and that's expected to grow to 29 billion by 2031. So one of the examples which we're going to explore today of a change in approach to insurance that has, and particularly the claims process, that's rapidly grown over the last 10 years. It has been around for a while in various forms, and we'll probably hear more from Nash about that, but how technology has really allowed it to run. And then, in its developing, makes up around 50% of issued catastrophe bonds in the 100 billion market. So, it's a real significant player now in that market. Kind of moving back to the left-hand side, middle down, more widely, the insurtech market continues to grow, new market entrants, and again, we work with a lot of customers in this space, and I think the insurtech space is very interesting in that it's very broad. You have everything from vendors who are developing insurance-related products and really adding value to that market space, to those neo-insurers who are developing new products, parametric insurers developing new products, and a majority of them, particularly in the claims space, is around bringing efficiency, but improving the customer experience, and C, hopefully ensuring that when they suffer a loss, the funds are in their account as soon as possible. So that's insurtech markets up from 10.4 billion this year, up from 8.1 billion. And then in terms of just more broadly on the digital transformation across the market, Accenture did some research, and 68% of insurers rate digital solutions their top priority, their business strategic initiative. So there is this huge kind of focus on digital transformation, and it's having an effect on probably all of our kind of day-to-day way we operate and how we do our business. And the one thing I certainly find with this is talking to customers that we work with is sometimes they're very they're at the forefront and they feel very kind of smug that they've adopted and they've changed. Others feel like they're a bit behind the curve, but generally I think there's still a lot behind that who haven't even yet come up with a strategy or how they're going to apply it, particularly in the claims environment. So the fact that all of our attendees today have even joined this presentation shows that you're thinking about these things, you're probably doing those things, and hopefully some of that will come out in the questions. Then ultimately, customer experience, obviously a huge part of anyone who works within the claims environment. And the one thing that can really add value to the business, well, not the one thing, one of the many things, but a key thing is around customer retention, and that customer retention remains on average, or customer acquisition is typically 5 times more expensive than customer retention. I think a lot of the customers I speak to who are selling kind of innovative solutions to new customers, to whether that be millennials, Gen Z, whoever that might be, customer acquisition is particularly for some neo insurers, is a real high cost. So retaining those customers is key, and certainly in a lot of lines, that retention can be significantly impacted by what people's experiences when they're submitting a claim. And then finally, one more from the payment side is that payment methods are a key part of delivering that enhanced experience. We did a survey recently, this was in the US, so conscious that this is a kind of very different market, but I think most of us have activity with the US market. But there they found that 15% of customers find only 15% found paper checks to be a very convenient payment method, which I think is definitely something we've moved away from increasing here, but still the US lags behind. But certainly very relevant to the fact that people's customer expectations changing. Anything you'd add on any of that?
No, that's good. I was laughing a little bit to myself because we recently launched in the US a year ago, actually. And the first brokers we signed up did ask us if we had a postal address for checks. We just said no. It seems we don't have an office in the US. Like, well, where will the checks go? Who will check the mail? We're just not doing it.
Yeah. And I think that's the joy of being a new entrant. You can set the conditions earlier. The final kind of slide before we move into the more of a discussion format is looking at, again, this is a survey we recently commissioned, and again in the US, but we sampled 1,000 insurance buyers across the US. This is more in a kind of retail environment, but I think we often see that actually kind of behaviours that people see in the retail is replicated, or in some of their expectations, some of their behaviours in the more commercial environment. But I think none of us would be surprised that cost remains a key factor. Although I think definitely we're seeing a real interesting pattern emerge in the US, and particularly in the property market in some states, where the cost of insurance is becoming such a challenge, but people want that coverage, so it's not an easy one. Speed and choice of payment is right up there, which was interesting that remains a kind of key factor, and that's encouraging for us as claims professionals, that actually that payment, when they are expecting the speed in which any claim the decision's made and a claim is paid, is a crucial factor, and very closely alongside that the customer care, and how that can really that's all part of the experience. And I think the one thing I kind of took away from some of the recent events I attended was the difference between kind of no touch, low touch, high touch, and how in some demographics and in some customer journey, there are certain people now, and depending on the complexity of claim, that would prefer that no touch experience, where they literally submit something electronically, digitally. They don't have to know what anything that can make their experience easy as possible without having to dig out different reference numbers or different points. They can put it all in and submit it, and any follow-up questions are dealt with either via an app or via email or whatever is the easiest digital solution. Whereas, and a lot of us have had a completely different behaviour with our phones now. A lot of us don't have a desk phone, don't have an office phone. We keep our phone on silent. So actually how we move away from how human behaviours kind of change and how we expect to interact. But then there's still that kind of low and high touch, where particular complexity of claims, or if there is a different kind of demographic of the person, the insured, actually they want to still have that interaction. So something we'll definitely talk about is how that can change across different markets. Percentage of claims paid, I think, is probably obvious. Everyone wants their claim paid. Company values, I think, that shift towards value-based, ESG, being transparent with what a company stands for, what it's about. It still plays a big part in people's decision making. Digital platform, definitely when any of us have to submit a claim via a digital platform, ease of use, kind of logical sequence, lack of repetition, filling in details more than once, and then a seamless journey all the way through from that payment, that you can do it all through a digital platform, is certainly the future. And then finally, recommendations is there as well. So just a few things to kind of get us thinking, but and then we'll move on to some discussions. I'm just going to skip past the poll for now. These are some of the areas we'll discuss, and yeah, let's enough from me. Yashik, let's talk about kind of the role in technology. You're in a kind of cutting edge part of the industry. It'd be great to hear a bit about kind of what Flood Flash deliver and why what are the kind of key things that have seen the growth in adoption of your solutions.
Yeah, so just for those who don't know, we are a parametric insurer. The concept of parametric insurance has existed for centuries, in fact, and Mark, you alluded to this. So in ancient Rome, they had something called a bottomry contract, where if a ship was lost at sea, the owner received a pre-agreed amount that had been set before voyage. In a more modern context, we talk about life insurance working like parametric insurance. So essentially the event that triggers most life insurance use cases is death. There's little argument about how dead you are, or even indeed the value of your life, of your future earnings. and your named, if you like, beneficiaries will receive a pre-agreed amount. So essentially, this is how it works. If a certain event is met, a pre-agreed amount is paid. In our case, that event is depth of flood water. So we install sensors outside of all the properties that we insure, and these are what measure the depth of water. When that depth is reached, we pay a pre-agreed amount. So one of the reasons we exist is because we identified, if you like, a gap in the market. Not all insurers were willing to insure all flood risks. And so that's where we've stepped in. I guess the reason this works is because it provides, if you like, an alternative way to price risk. You're only concerned essentially with the probability of the event occurring. So in this case, water reaching that certain depth, and you're less concerned with the value of the claim because that is pre-agreed. And it's really, if you like, the size of those jaws, if you like, how small or large a claim could be for an insurer that introduces even more uncertainty when pricing a risk. And we managed to reduce that significantly with, if you like, this way of providing cover. And this is one of the reasons why we're able to fill that gap. I guess the reason brokers, we distribute primarily through brokers, and customers as well are taking to it, is because they have a need. They have exposure and they are looking to cover that need. We did some research ourselves a couple of years ago, and what we found was that business customers were willing to take or use technology where insurance was concerned if it helps them to get a better price, which here could be doing. So it's not only that we're offering cover, sometimes we're offering it at a better price. They were also willing to use technology if it improved the service. And I guess that's the other thing that we do quite well with our claims service.
So how does it work? So if your sensor is on the property, does it physically get submerged, or does it measure the water in the area? It
can get physically submerged. So the sensor is like it's like a digital meter rule is how you have to think about it. Okay. It's a little bit taller than meter. It's about my height, 160 centimeters.
Okay.
And it has a couple of holes at the bottom. And when it starts to flood, essentially water goes up one of the tubes or two tubes, and then one is used as a control. So that's how you know there's no water. And when the water starts going up the other tube, we know water is coming up. Okay. This sensor. That sensor is connected to HQ. When there is no water being detected, it only communicates to us once a day. And so we know it's alive. The battery's still working. Once it starts detecting water, it increases the frequency at which it sends us data. Okay. And it's telling us the depth of water. That's the primary data, as well as a timestamp and a few other bits of information. On our side, essentially, we're looking at that depth of water and what the policy says as soon as one of those depths. So policy could have multiple depths, but as soon as any one of those depths is breached, we open a claim for that particular trigger, if you like, and we start our claims process. Okay,
so here we've got where the claim, rather than the customer having to proactively contact and find out where they've got their insurance, you're starting the process on their behalf.
Precisely. So exactly, our claims process is proactive. We are the ones who contact them. It's also informative, as in we keep them informed as to where they are in the process. Ideally, the only time we should hear from the customer is when they confirm their payment details. We do have to check, even if we have them on file, that we have the right payment details.
You validate that.
Yeah, so we validate that. But
up until that point, are there updates? How do you typically communicate via email or phone?
Via email. And we, like I said, we hope they don't reply except to confirm those payment details. And even once we confirm payment and the claim is closed, we're still happy not to hear from them. But if they want to send us a testimonial, or we want to contact them for one, that's also fine.
Yeah. Okay.
I would say the whole process is quite fast too. So because people have asked me, how many notifications you send. Essentially, we send them 3 pieces of communication. The first one to say your sensor has notified us that water's reached this depth. The second one is to confirm those payment details. And then the last one is to say payments made and closed. But that can happen quite quickly. As you mentioned, about this time last year, we paid our fastest claim in 3 hours, 50 minutes. So let me explain exactly what that means. As from the moment the water reaches that defined trigger depth,
and did they have multiple, or I might be being a bit more too precise, but it's...
I can't remember on that specific...
But it hit a level that triggered a claim for them.
So what we do, so this is also about paying claims fast, is we treat each trigger as a separate claim.
Okay. Makes sense.
One of the reasons we do that is because we have some very slow evolving floods, if you like. And we've had some which it's a week between the first and maybe the third trigger being met. But the business might benefit from that immediate bit of liquidity you can give them with the first claim. So we respond to them as soon as they happen. You also asked me if the sensor gets submerged. It can do. It's fine if it gets submerged. But like I said, it's 1.6 meters.
It's the actual sensor, but there's the sensor at the top, there's a tube down, and so you'd be in trouble if the topic got submerged.
No, it's fine. I mean,
no, we're not. As in, you'd be in trouble.
There's a business.
There's a lot of water.
Yeah, exactly.
Get the boats out, and
that slow evolving one, it did submerge the sensor, which was actually placed above ground level. Normally they're placed at ground level, and the recording was above 2.8 meters. Their third trigger was at 2.8 meters. Wow. And the water went way above that. The sensor is no longer recording it, but we don't care at that point because the trigger's there. So it probably reached something like 3.2 meters before the water came down.
So what would be, obviously you've got that very kind of niche piece of technology for actually measuring the level of water. What other kind of aspects of technology do you think kind of Flood Flash have adopted that, and this might be kind of back end, it might be process that you think have helped deliver that kind of transformational claim experience for your customers?
Yeah, so I do think the sensor is certainly the most unique bit of technology that we have, and it's proprietary. Nobody else has it.
Do you got a patent?
No, we do not.
But you're just so good at what you do, no one else can try and do it.
I mean, we could. You can take one and reverse engineer it. You could, but I guess you'd also have to set up an insurance company.
It's quite a few barriers.
I think you're quite motivated, is what I'm going to say. But I guess apart from the technology, it's probably data that drives what we do. One of the things you alluded to, and I also did a bit, is that parametric insurance has existed for quite a long time. But the reason it's growing now is the availability of data. So whether using third-party data or, in our case, proprietary data, that's what allows you to price risks in the first place. And in our case, allows us to know when an event is occurring and that trigger depth is met. And I guess the third use case, which is relevant here for data, is we also validate these claims using third-party data. So the sensor does, if you like, send the trigger, but we're not relying only on the sensor data to validate claims. It's an important thing people often do.
Is that related to kind of confirmation of loss then, or is it just down to, or is it, before I interrupted, it's fraud. It's not someone filling it with a jug from there.
Yes, quite. But I would say fraud. I mean, it is anti-fraud, if you like, process. The other reason we do it is because we actually also need to validate that, in fact, your flooding is as a result of natural causes. So
it's weather-related data.
Exactly. So the main example is always, I always say it's the equivalent of sticking your head out the window. We did have last summer, and a day when it was sunny, quite like today, but it was the middle of summer, and near Gatwick, one of our sensors went off. And so I'm sitting there and thinking, there's no way it's raining in Gatwick. It's not that far away. I literally walked out because I just couldn't believe it. But there are other bits of data that we use which told us it wasn't a flood. But we did call the broker just to see if they could speak to their customer and tell us what was happening. And Thames Water had some pipe burst. Yeah.
So
Yeah.
it was
water, but
natural.
yeah,
It wasn't natural. Interesting. Plenty of water in that one. Good stuff. So yeah, that data is I suppose across the market is what's that transformation has been, that access to data, the use of data, whether it be the consumption and processing of data to help speed up decision making.
Yeah.
Yeah. Okay, sounds good. And you talked about 3 hours 50 minutes. Was that when it was the claim was paid? Because I'm trying to segue into our next question here.
So it was from from when the trigger was met to when payment was authorized on the Vitesse platform.
Okay, well, that's a nice segue. So then that's about ensuring that you have access to. So your team would then authorize the payment of the claim, which you use Vitesse, which is obviously why we're sat here together.
Yes.
And that's then released, and then it kind of the ball's then in our court to try and ensure that we've got the quickest actual payments try and get into their account.
Yeah, but for sure they have the money. A lot of them go and check as soon as they get our confirmation email just to make sure they have the money.
And it is an interesting thing, isn't it? I kind of, when I first started, when I was at JP Morgan, we used to talk to kind of customers. It was always kind of payment was almost seen as actually, as long as they got that email confirming that they were going to be paid, then people were okay with that. But even in the last 5 years, I'd say that people's expectations have changed a little, and they want to actually see that confirmation of actually having the money. And that might be either because we've just got used to kind of instantaneous life. We order food. We used to, in the UK, which is all the UK audience probably, you'd order your takeaway and you'd rely on when they told you to be here. Now you can track it on your app till it's literally at your door. So it's something that kind of that expectation in all aspects of our life to have kind of information available to us and speed means that people want to see it.
So I guess also the expectation around the industry is that, first of all, insurers will quibble over your claim, then they'll probably try and negotiate you down or try not to pay. And then even when they agree to pay, they will, pay you in installations or slowly. I'm saying that's the expectation. I'm not saying that's necessarily the case. One of the feedback we get from our customer testimonials, those who haven't paid, is that when they first heard about Blockdash, they thought it was too good to be true.
That's nice feedback.
It's great feedback. It's actually also a problem. It's a very well-known problem, actually, in behavioral economics. And so I think for our customers, when they experience a first claim, they will go and check to make sure the money's come in. 2 out of 3 of our claims are paid within 48 hours.
Correct.
The other 1 in 3, I'll say a lot of it is down to the customer, blaming them. But I'll give you a specific example. But actually, this site that had the 2.8 meter trigger, we paid them twice. They had a claim 1 year, then claim the next year. When it came around to the next year, it took them more than 2 weeks to confirm their payment details. Oh. So, but I think a lot of it is because, yes, once we've told them we're going to pay, they're quite relaxed about it. We were chasing them. Exactly. We want to close this, baby. So I think we do see a bit of both. Those who are happy once they know we're going to pay. But I think in our case, it's also the ones who have experience of the Blockdash proposition. Those who do not experience it are pretty on it.
Exactly. And some maybe in more kind of commercial, if they're not, if it's a small business and it's loss of earnings, they may need that liquidity, as you said earlier, to pay staff or to hire salvage, whatever the hell they need to hire, a cleaning company. Whereas if it's a larger kind of commercial organisation, then they don't need those immediate funds. In fact, we should always avoid personal anecdotes and things like this, but I'm going to share one anyway. It relates to water and the claim that I had last year when a flood, escape of water, well, from the sky, but it came through the ceiling of the building and flooded my little flat. And first it took 9 months for the whole restoration and that side of it, which was pretty painful. But then it came to the kind of loss of earnings claim, kind of business interruption for no rent, and that got approved eventually. I think it was January, end of December last year, and I didn't receive the money for, I think it was 7 weeks. And it was I won't name and shame because that'd be totally unprofessional, but it was a global insurer that we all would recognise the name of, which started with being sent a piece of paper I had to print off and write my bank details in. So it didn't start with a great experience, but and despite the efforts by the broker, it took 6 weeks. I ended up making a complaint, and that then got kind of bashed around. So I spoke to someone at the insurer in a more senior position, and the point I made then, was when you're talking about kind of loss of earnings, and that's in the current kind of climate, some people can't. Some people haven't got the funds available to
tie them over.
Exactly, and and it was not a significant amount of money, but it was enough that there were times in my life where I definitely would have needed that to pay bills and stuff.
Sure.
And it's a really that kind of, and as we become increasingly reliant as a population, I'm talking as kind of the individual consumer now, the insured, actually they may not have those funds to tie them over or access to credit.
And that's a good point, because I always do say paying claims slowly can pose an existential threat to businesses. I don't know if you've seen the stats in the UK. Business in the community estimates that 40% of businesses will close after suffering catastrophic loss from floods.
Wow.
And
40%.
Yeah. And in the US, it's the same statistic. 40% of businesses never reopen their doors after a claim. And most of them do have insurance, but the process can take so long, and it's a cash flow issue for them. There are some businesses too, or business owners who, these businesses are their lives, their livelihoods. I met one business owner who had a wedding dress shop that flooded up north in the UK about 2016. But when I met her, it was about 5 years afterwards. I was interviewing her, and she cried for about half the interview, interviewing her about it. And she explained that they'd had a death in the family a few months previous to that flood. But she said it was quite the same thing for her. Yeah. So they can be the cash flow issues, but they can be quite heartbreak as well.
That loss, and particularly if you build a business up and it's you invest time in getting it right and creating a nice atmosphere, and then it gets flooded.
So I appreciate we don't solve all their problems by paying quickly, but I think we give them one less thing to think about.
Exactly. And actually that can be the real point of frustration as well, that isn't that one thing they rely on. And we saw it during COVID with the business interruption insurance, where people weren't, those claims weren't honoured, and it ended up in the High Court. And actually the kind of frustration that could, and probably the reputational damage that did to the insurance industry, that at that time of need, they weren't there, and there was technicalities.
Yeah.
I don't want to get into that.
That's a whole different
so we talked about money in the right place. So I think that's great to and as you say, ensuring those funds are there, they can be paid, and I think not relying on having done the hard work, made the decision, having to work out where that funding is coming from. So a model, and that's certainly something we try and help our customers achieve, is having that access to the funds, and then as well as having access to the funds, so when that payment's authorised, or that claim's authorised, the payment's made, the money's there, so there's no delay waiting for funding to come in from whoever's providing the capacity, but also that we try and deliver it in as quickly as possible by whatever rails we can do. Ideally, local ACH payment. We have 10 minutes left. We have one more kind of discussion point for us, and that's about partnerships. So, lots of, actually, should we do a poll quickly? That's a good idea. Let's do the poll, then we'll come back to partnerships. Bear with me. Okay, Tim, can you fire up the poll? Because this will be quite relevant to the partnerships question. So please quickly vote. I don't know if you can all see the results, or I can only see them, but
I can peek.
You compete, definitely. Oh, here they come. We'll give it
That's quite good fun.
live. It's like Eurovision.
Yeah.
Eurovision for insurance. I'm going to once we get 70% participation, we're going to call it, or we're going to discuss it. We're at 58, so all 70%. There we are. Yeah, we're 75. We're going still. So I think the interesting thing is, sorry, Tim, do you know if they can see the results, or I know the recording won't be able to. So I'll talk to the results. So the question is, what areas have you seen within your organisation where innovation has been most embraced? So highest was claims payments at 37%, and then joint second was partnerships and claims management systems at 21%, and then 11% for loss adjusting and 11% for other. So I think we've talked about claims payments, and great to kind of hear that adoption of new kind of technologies and new innovation there, and you know, we've been very lucky to work with hopefully lots of people on the call today who have worked with us. But also, as you know, as we've talked throughout today, and how Miyashi said, you know, actually that whole claims payment is owned across the board in terms of ensuring that whoever's managing that claim is effectively set up to deliver that. And you've got the challenge of, well, not a challenge, but you have to validate your customers' bank details. But the good thing is they're in control of that. If they provide it timely, you timely release the payment. So that's great to hear. The second highest was partnership. So let's take us on to that. I'll share the results for you. Didn't realise it. Or maybe you could do that. Right, I'm going to turn that off and move on to the final subject for our discussion before we go to questions. So partnership. So Flood Flash, and kind of, I guess you're a partner to some, you have partners. What would you say has been your experience, Nash, in terms of working with partners across the market? Kind of good, and without naming names, any bad experience, and how do you think that's helped customer receiving the best experience?
I'm not going to call any of them bad, but I think one of our best partners, we've only started working with them in earnest recently, but the other day I met up with them. They were asking me if I was happy, and I said I'm ecstatic. And the reason I am happy working with them has to do with the success of the partnership. You might wonder, therefore, why I'm happy, but they're really, if you like, committed to the partnership. And when things have not turned out, because actually this is what happens with, I'm going to say, half the partnerships, things on day one don't turn out how you thought when you were negotiating.
Yeah.
They just don't. Everybody mapped out all these processes, and then it turns out you forgot to discuss this little bit, and that's what's holding things up. And so, yeah, when things haven't worked out as they should, they are, you know, they're really committed to understanding why, coming up with solutions, implementing those solutions. And so you feel you can build on whatever you have and improve it, and you'll get there. So maybe we've been lucky in that, I'm speaking of my Flood Flash experience in particular, we found partners who are willing to work with us. Some partnerships on day one just haven't. So
do you think, how much of that is the people then? Is it a large amount of the people? Obviously it's the culture of the company that you're working with. It's probably, rather than signing a contract and then forgetting about it and kind of moving on. But I guess individuals also make a difference.
Yeah, I guess it's individuals. I'd like to say most of them are excited about working with our proposition.
Yeah.
So a lot of them have various partners too. They're quite excited about that. We try and make sure there is an affinity. The partner I was just talking about now, I actually started talking to them more than 4 years ago, but it wasn't their priority as a business. And I think it's important to ensure that you are aligned on, you know, your priorities as businesses, so you aren't frustrated because they aren't putting as much energy into it as you'd like them to, for example, or you're also aligned on customer experience. So our definition of fast claims payment, as we found out with our capacity providers, previous capacity providers, was not the same as theirs. So it's
What are they different? You have.
yeah, so we were expecting to pay in 48 hours, and they were like, "But 2 weeks is good." I was like, "No, 2 weeks."
And they're your previous capacity.
Yes, but they got there.
Okay.
It's just on day one. For them that was lightning fast.
Yeah, that's interesting. So it's actually what does good look like to different people, and understanding that up front.
And also for them, the other thing they also thought was, because I do remember these conversations where they said, well, you only need to pay one claim fast. So it's true, I talk about 3-hour, 15-minute claim, but it's not possible for us to pay many of our claims at that time, because if the flood happens, let's say even at 10 p.m. at night, we're not paying till the morning. We're really, that's not happening. Like I said, we rely on the customer to come back to us, and so if they take 12 hours, we're not paying in that speed. But 48 hours is always doable. So for them, they thought, well, you just want to pay one claim in 48 hours for the headline. I'm like, well, no, because what brokers say to us is, sure, you paid a claim in 48 hours, but how many can you pay in 48 hours? They want to know they can rely somewhat on that stats. So,
and also back to the first points we talked about in terms of retention. If a customer has a positive claim experience, they remain a customer. So if they've been led, if they don't receive that experience, then that's a costly acquired customer that you may not retain.
Quite. And the brokers also we pay some claims before the brokers are online. Like on a Monday morning, they just get into work and they find out it's all happened already. So I think our service isn't just for our end customers, it's also for our brokers. They like that. For them, it's also hassle-free.
Well, it's job done for them, isn't it?
And they've got a happy customer. And again, the product worked as we said it would.
Well, that's interesting. I think the partnerships, certainly what you find with partnerships is that, as you said, around being aligned and kind of what you're trying to achieve. And I see this particularly when we work with TPAs who are trying to kind of deliver an efficient solution. They're trying to provide increased transparency to their carriers. They're trying to look at how technology can help the payment claims, and actually if they're committed to that journey, or they're in a position where they're able to facilitate that, and you're therefore aligned, it's much easier. And actually, if they're not yet there and they're trying to do a partnership to get them there, you need to kind of know that up front. Because then you can work together to try and go, okay, let's scale this up. Let's look at how we can make an improvement, how we can progress. Let's not try and achieve everything instantly. Let's look at staging that to make progression. Whereas others, and this might come to kind of new market entrants who have the fortune of having new systems, lack of legacy, everything API, they can click the switch and, within weeks they can have a fully established process in place in terms of the physical payment of claims, whereas some, whether it be an MGA, whether it be a TPA, whether it be a carrier doing in-house, if they haven't got that system in place, they're not going to achieve on day one.
No.
And if they've been sending payments via, batch upload, or they've been doing, all the other ways you can do, payments have been made, or they're using third-party systems, whatever they might do, it's not going to be, you've got to help them on that journey.
Quite.
And the hardest part is starting.
Yeah, I agree. The hardest part is starting.
It's like everything. Laundry, cleaning, whatever it is, the hardest part is starting. That really annoying email you don't want to write. Which I did one this morning, which I really did, but I started it and then I finished it.
Well, I have one this afternoon.
Well, that takes to the 45-minute mark. So, Tim, if anyone has any questions, Tim, can you just remind people how best to submit questions, and we'll give it a 30 seconds if we have any, or you've received any. If not, we'll. I know we had some pre-submitted.
We do, we haven't had any questions through on the chat facility yet. So if anyone does have a burning question or any question at all, do put it in on the chat facility on Zoom, now, and we'll make sure that's asked for you. In the meantime, as Mark alluded to, we do have a few questions we've already received. So let me ask you the first of those. Are you seeing any significant challenges with getting the more established institutions to buy into introducing new technology?
Do you want to go first?
Yeah, I can answer. I guess you said getting institutions to buy into. I don't think it's that difficult to get them to buy into it. I think they understand the benefits, but one of the things Mark said there was a lot of established institutions have a lot of institution in the first place, a lot of legacy. So there's an awful lot of them to move, if you like, to make way to implement new technology. And I think that's their main challenge. I don't feel that it's hard to get the buy-in, but it can be hard for them to see how to make it work in their like huge and complex organizations.
Yeah, and kind of back to what I kind of just covered there. I think it's finding how to start the process. It's finding out actually what to, and I think in order to get that question right, you have to, and the best discussions I find to have is when you have that discussion with them and they kind of comfortable enough to involve you in that discussion. So because it often relates to what their objectives are. So we have some customers that are kind of very much looking, or partners, however you want to phrase it, looking for quick wins. So they want to kind of a proof of concept, one of those two. So they know that they can't take full adoption of a new technology across their business, particularly like those large institutions that have gone through a lot of acquisition processes and have multiple different systems across different areas of the business. So I think there is a different approach depending on what they're ultimately trying to achieve. So in some cases, it's delivering a solution into an area of the business that is the most advanced from a technology perspective or a system perspective, or where the benefits can be the greatest, i.e., costs can be reduced, or service improvements, or efficiencies, transparency, regulatory controls, whatever they're trying to achieve. It might be easier to deliver that or there might be an area where it just, from a cost perspective, it's the most efficient. So yeah, I think it's really understanding what the goals are of the business, and then building a kind of a roadmap to delivering that. And I often find as well is so many times you have those conversations and there's almost a bit of embarrassment or awkwardness around what they're where they're at, and it's kind of ensuring that the quicker you can get that transparency on the challenges they have, the better, because they're obviously trying to solve it because they're having that meeting, they're looking at solutions, and actually these are challenges across the market. So get the conversation happening is the starting point, and then with the right people in the room, you can figure out what that process can look like, and do you go to a proof of concept to do it? Do you go for or do you go much broader if the systems allow and the processes allow? Great, good question, thank you. Tim, another one, please.
Yeah, and just once again, a reminder to send through any questions on the chat facility. Do so now and we'll get them asked. Second question is, are there any particular areas of parametrics insurance where technology is making a difference?
Well, I'm definitely not going to answer that one.
Yeah.
So, I mean, you talked about earlier that there's technology has been the catalyst that's driven it since its early adoption Roman times.
Yeah.
Is there anything that, we talked earlier a bit about technology, but specifically around technology or beyond what Flash are doing that you've been particularly impressed with, maybe? Any technologies you've seen that are delivering parametric solutions where you've gone, oh, nice.
Yeah, so there are two approaches to parametric insurance. Either you use I'm going to call them local sensors like we do, or you use satellites, definitely not local, to get sort of bigger pictures. And the other thing you're now getting is a bit of a blend of both. So yeah, definitely seen that making a difference. Flood insurance is one of the areas, clearly what we do, and where there's a lot of innovation. One of the reasons is when you look at uninsured losses globally, the flood is, if you like, the biggest chunk. Flood also it's every country has a flood problem. That even the example he uses, even Saudi Arabia that doesn't have rivers has a flood problem. And so it's, I guess, a problem that if you want global domination, from wherever you're starting in your own corner of the world, you can see yourself exporting your product into other countries. So that's where we've seen a lot of advancements. One of the things you can do in the UK, the regulation is quite simple. So actually, we have a pure parametric product, as I mentioned. Essentially, if that event is met, you pay. But in the US, they have what I describe as a hybrid parametric product. So you do use the trigger, but then you also need proof of loss. So where they can use that is like our sensors essentially are the trigger, but they can use satellites or drones to then estimate or give a value for the actual losses sustained and then pay out on that basis.
Okay, so that's your kind of confirmatory evidence.
Yeah.
Nice.
But they can, particularly if you're looking at like a building, you might be able to say, if you can imagine in the US where they also build from wood, bits of buildings are swept away by floods. So you might be able to estimate that literally 80% of the building has gone.
Yeah.
And therefore that's what we pay.
Yeah.
Yeah.
That makes sense. Brilliant. Thank you. Next question, please, Tim.
Sure. Are resources a blockage to delivering change and adopting new technologies?
I'll try that one first. I'd say yes is probably the answer. I think we have lots of conversation with customers where they are looking to make change or looking to adopt new technology. And it may not be the technology part of it. It may be just the, typically you're adopting a change that's stimulated by a different approach, a different technology, but it's any change where you're making a flip or you need to do some work to facilitate that change. And I definitely think resources are a big factor. And, we see some customers that are quite responsive and quite flexible in resources. Others, often it's quite a elongated process to get resources assigned. So even when they kind of assess the cost benefit of a new approach, a new technology, I talk from experience, kind of Vitesse adopting us as to facilitate payment of their claims, they, in order to get from where they are, which may be, accounts with multiple TPAs that are held in local bank accounts, they have no transparency of where their funds are. They've got lots of stakeholders to engage. That the whole process of changing and evolving that into a new system is the barrier. So, and actually we've reacted to that by facilitating, that resourcing for them. So we've got teams now who will actually, on their behalf, with their endorsement, go and talk to carriers, TPAs, and assess what their current situation is with their loss funds, their claims funds, whatever funding that TPA or third party or MGA is managing. And we'll work with them to facilitate the migration of that onto the platform we host to enable the claims to be paid that way and give their transparency back to the carrier. So I think, that's what, and I see that a lot when I kind of speak to other partners in the industry where they're only kind of as good as the delivery that they can deliver into putting that system in place. And sometimes that does come. And actually, it's actually a much more efficient way of doing it because the team we have here, for example, who work with all our TPAs and MGAs on that process, they're so familiar with it. They've got relationships. They understand the process. So rather than our customers having to build that knowledge internally and provide resources and understand it, they're actually, if you can provide an SME and there's an efficient way to do that, then it can be a much more efficient process. And then we go back to compressing timelines as well. Anything you'd add on that? Or?
No, my answer is going to be one word, yes.
Good. Okay, I think we've probably got time for one more, please, Tim.
I think we have, yeah, which is, do you see any difference between the UK and US markets in their attitude towards change or adoption?
Go first. I've got a few thoughts.
Yeah, you go first.
I think the US market absolutely bamboozles me, and I'm going to talk from a payments experience, which sorry to kind of relate to that, but it even in a kind of recently they've been a lot of excitement in the US market about the introduction of contactless payments and how that's going to kind of revolutionize people's experience in the US, whereas I think it's 2007 that contactless payments were launched here. So in that, the field we work in, there is a real difference in kind of technology on a consumer level, which has an effect on a more commercial level on how they're used to adopting technology. And we talked earlier about, checks and stuff. There is still a kind of some antiquated processes out there. I think they're trying to change, but actually I think there's some quite traditional ways of doing things that are quite deeply kind of rooted into almost the culture and stuff. So which is kind of a bit of a contradiction, because in so many other respects, kind of the US is the leader in some technology. So I think the US is different, but I think at a kind of institutional level, it's probably pretty similar. They know that they need to make changes, but it's kind of legacy systems, legacy processes, and trying to facilitate that change. And that's when it kind of goes down to open discussions, a kind of consultative approach where you can talk to kind of experts in the market and actually lean on those vendors, suppliers, partners to really help drive that discussion and provide their expertise. And I think that's certainly where we've seen they are a lot more open when you can kind of hold their hand through the process rather than just expecting them to understand what change might look like. Anything you'd add?
I was going to say, I work in insurance, obviously. And that's the times insurance isn't always the fastest moving. But in the US, it's really much more of a political hot potato. That's like one thing. It's complex because you are really working across 50 different markets rather than one. And I think the litigious nature of the market means people are more cautious. So everything you want to do, I'm responsible for global claims. I'm actually also responsible for the insurance product itself. I can rarely copy and paste stuff we've done in the UK and apply it like that to the US. There are always more hoops to go through. In the end, we might get there, but there are always way more hoops to go through. And I think it links it a little bit to the question before. If everything is time consuming, in the end, you're going to have resource constraints, and in the end, you're only going to be able to push through so much of it. And I do think, like I say, the fact that insurance is such a political hot potato and it's a very litigious country makes people more cautious towards change, or just they need to summon up a lot of energy as well to make a lot of change. So their appetite is far lower than the.
Fantastic. Well, look at that. We're at time. So sorry if there were any unanswered questions. As Tim said at the start, we can try our best to get those answered afterwards. But firstly, thank you very much, Nyasha, for a hugely insightful session. I learned a lot. Hopefully everyone enjoyed it. And thanks to the MGA for hosting us today.
Great. Thanks, Mark. If you wouldn't mind just moving to the last slide as well, because I know that's got your contact details. That would be really useful. Yeah. Perfect. So you can just see them there. So just to say thanks very much, Mark and Nyasha, for your presentation today, which I'm sure everyone will agree has been fascinating. You can reach either Mark or Nyasha at the contact details shown, as we mentioned, or feel free to contact me at tim.richards@mgaa.co.uk with any questions, and I'll be happy to pass them on. Thanks all of you for joining us. Please don't forget to provide your feedback, and do look out for forthcoming MGAA events. I do hope you have a productive afternoon. Thanks again for joining us, and see you all soon. Thanks
Thank
again.
you. Thanks, Tim. Thanks.
Cheers. Bye-bye.
Bye-bye.